Welcome, Marco Palmero, founder of Ulysses in Dubai. In this video, I will talk with you about deal flow, and I will talk about how deal flow is structured, how you source, qualify, and select opportunities, not only in the Middle East, but across the entire world. And I will do this because many people struggle in understanding how deal flow works, and they also struggle in understanding how important it is to have an abundant deal flow if you really want to buy businesses. As we will see, not all the deals that you're going to look at are going to be good ones. In the vast majority of cases, they're going to be a pass. And so it is important to, one, have an abundant stream of deals coming to your doors, and have a predictable way to source these deals. So let's talk about the deal process a little bit more. I want you to think about deal flow as a sales funnel, because in reality, there's no difference between the two. When you go ahead and you want to sell a product or service to a target market, you create a funnel, and you have different types of people that are at different stages of the funnel depending on their level of awareness and also their level of commitment in buying a certain product or service. And you try to move as many people as possible down this funnel until they get to a point where they ultimately buy. And again, this is a pretty simple and straightforward process which every business owner, investor will understand. I think from a deal flow perspective, the process is exactly the same. The only thing that changes is that you're creating a funnel of sellers instead of buyers. Because of course, in this particular case, you are the ones who wants to invest, buy, or acquire assets. And so you want to build a funnel of people that are interested in exiting their business. And how you go about building this is very, very similar to a sales funnel, other than you might deploy different strategies and different approaches to find these deals, because of course different strategies will apply. But I think the overall concept and the overall structure of deal flow is pretty much the same. You got an industry or a niche that you're targeting, and that will be your initial base of people that you can reach out to, that you can contact, that you can market to see if they're interested in selling a business. And then as you move them down the funnel, there will be qualification processes that they need to go through, and that you need to make them go through in order to get to a point where you can say, okay, this is an opportunity that I'm interested in. Let's move it to the real M&A process, which of course is NDA, initial due diligence, letter of interest, letter of intent, and purchase and sales agreement, due diligence, all these sort of things that you already know. Now, I want to talk about what happens before, because many times people overlook that aspect and they want to immediately start to evaluate opportunities and potentially close a deal. But the problem is they don't realize they need to look at a lot of them before they actually can move to that phase. And in some cases, they make the mistake of thinking that the deals that they found are good enough. Well, in reality, they're not. And I'm going to tell you just flat out, because if you don't have a predictable deal flow system, chances are the deals that you're finding are not good enough, and they're not the best possible deals that you can find on the market. And this applies not only for United Arab Emirates, not only for Middle East, but really for any place in the world. The reality of it is deal flow is crucial, because close to 90% of deals that you're going to look at are not going to close for whatever reason. And 90% of deals that you're going to look at are not going to be good fits. So we focus on really tiny percentages that are the ones that are actually good. But in order to make sure these tiny percentages are a sizable volume, we need to have a lot of people at the beginning of the funnel, so that we can end up with those 5, 10, 15 LOIs that might ultimately lead to 2-3 deals, right? And I think one of the problems that a lot of people face when building up their deal flow system is that, well, one, they're lazy, so they don't want to do the work that is necessary to build this type of pipeline. But two, they're also in a rush, so they might not have enough time to build that pipeline correctly, and as a consequence, they try to stick with deals that are currently on the market and try to satisfy their need with those opportunities. But the reality of it is you can actually build a pretty consistent pipeline, in no time, and start seeing tons of deals coming to you. We have done that for many people because we kind of had to build our own deal flow pipeline out of necessity here in the Middle East, and now we can deploy those strategies in basically any industry to create the same system for companies so that they can then get deals on almost autopilot. But I think going back to my original point, there are tons of deals that we need to look at before you can actually find good opportunities, because there are going to be many variables that you want to consider, right? You might say, okay, I'm in the I'm in the service-based industry. I want to buy consulting firms. Okay, what type of consulting firm? That's the first selection criteria. What is the geography? What is the ticket size? What is the profitability level? What is the employee count? Do you target operations that are owned by the owner or that are already working on autopilot? Do you want the owner to transition, not to transition? What kind of financial performance do you want to see in the business? Do you want recurring revenue, non-recurring revenue, and all these sort of elements that will progressively enable you to filter the opportunities down. But just thinking that, looking at deals randomly will enable you to get some of that match all these criteria is just delusional, because it ain't gonna be the case. You're not gonna find the good deals by luck or by networking or by talking with your peers. There are certain ways to find deals through networking and leveraging accounting, legal teams, and investment bankers, but those are not the only solutions, and by far they're not the ones that are going to yield you immediate results, because we all know that networking is an inexact science, so you cannot clearly track the performance of your networking effort, and you might see results coming after 3, 4, maybe even 10 months. And so the inability to track the results of that effort makes it a little bit less effective and a little bit less useful to you if you want to find a lot of deals and find deals on a predictable basis. So my perspective is that when you build a deal flow pipeline, there are going to be different tiers of deals. Of course, they're going to be the ones that are unqualified, so they're just people that manifested an interest in selling the business. They might match some of the initial criteria that you want to have in a business, so the ticket size, the geographic location and stuff like that, but they're not going to be targets that have been qualified heavily. Then there are more qualified deals that maybe have already gone through a preliminary due diligence phase. They already have all the box checked and they're ready for an initial interaction and maybe a discussion around preliminary offers and due diligence. So building up that pipeline will enable you to have different types of leads, and also it will enable you to understand how many leads are getting to the bottom, and is that a number that I'm comfortable with, or do I need to increase the input at the top so that I can get more deals at the bottom? So I'll give you an example for Ulysses. We happen to find that if we look at least 10 qualified opportunities, so that fundamentally match all our acquisition criteria, we're generally able to put out 1 or 2 LOIs for these deals, because two of them are going to be a real go, so the deals that we really want to make. So around 20% of the highly qualified leads are going to lead us to an initial offer. But in order for us to get these 10 qualified opportunities, we looked probably at about 50, maybe 100 of unqualified deals. So all these deals that are just in our industry, maybe the ticket size is the one that we're targeting, but they're not profitable, they're not independent of the owner, and they have all these problems that we don't want to see in the business, and so they're an immediate no. And I think understanding these different layers in the deal flow process is really supporting you, because then you can track the KPIs that you have and also say, okay, in the next 6 months, I want to close, let's say 2 deals. Let's reverse engineer the deal flow process and see how much output do we need to make in order to get to that result. So following my example, let's say that, every 10 opportunities lead to 2 LOIs. Now, I want to do 2 deals in the next 6 months, so I need 10 qualified opportunities. But in order to get 10 qualified opportunities, I need to look at least 100 businesses. In order to find 100 businesses, I need to, create a pipeline, let's say, of 500 businesses, and, on it goes. So that is how the deal flow pipeline works. It's very simplistic. It's pure math, and ultimately it is a numbers game. And I think too many times people try to convince you that deal flow is a matter of relationship, is a matter of knowing the right people, is a matter of networking in the right places. All these things are fine. They will bring you opportunities for sure, but they will not bring to you opportunities on a predictable basis. Constantly a stream of deals that you can constantly look at and qualify, so that you can say, okay, I haven't closed this one for whatever reason, but I know I have more that I'm coming next. So I'm also more comfortable in negotiating this transaction, because I know that I can walk away at any point in time. It's not going to be the deal of a lifetime that if it doesn't close, I'm fucked, right? I'm having other deals that are as good as this one that are coming next. So I'm very comfortable in my approach, and I don't need to stress about the lack of opportunity. I think that is one of the points that we really nail down at Ulysses, because back in the day, I used to rely on network alone, and also on systems that were not really effective here in the United Arab Emirates and in the Middle East. I then progressively started to build a deal flow pipeline that can fulfill that obligation for us, and kind of like bring us opportunities on a predictable basis, in a very streamlined way. And now we can fundamentally replicate that model in any business. So if somebody comes to us and says, okay, I want to find deals in the manufacturing industry across the GCC or the Middle East, fine, we can do that for you, because we don't only have the network, which is one part of the thing, but we also have the infrastructure that enables us to create that pipeline for you. And the beautiful thing about these things is that they not only have a streamlined way of working, and so they are trackable from a performance perspective, but they fundamentally give you a lot of control over what's happening, and you really know what the market is all about. And so you can also understand the industry better, and whether or not the opportunities you're looking at in relation to the market are good, medium, or bad. And again, I found it to be very, very good for us, not only for all the reasons I just mentioned, but also because it ultimately enabled us to find off-market deals. Because the most important aspect that I always stress is this idea of having off-market opportunities when you look at deals and when you build a deal flow pipeline. If most of the deals that you source are not listed on any exchange, any broker site, any Crunchbase or stuff like that platform, you're gonna have the ability to work with very motivated people, less competitive transactions that in some cases might also be a lot better than the ones that are listed on the open market. So your entire process of sourcing the opportunities will become much stronger, and it will consolidate the foundation of the entire acquisition, because then you can focus on what you do best, which is talking with people that are motivated and taking care of the M&A process, while all the rest has been already taken care of. And again, you can build it on your own. You can have somebody like us take care of it. The choice is up to you, really. But the point is understanding how the deal flow process works and the different stages of leads in prospects is key, is really important to me. So hopefully you find this video helpful. By the way, if you're interested in getting deal flow support and having us work with you to source, qualify, and select deals, we can do that. We generally take on only a few cases per quarter, but provided we have slots available, we'll be happily to look into that. So check the link below, and I'll see you in the next one.